Let's break down today's action with our panel. Joining us now is Barbara Doran of BD8 Capital Partners and Ohsung Kwon of Bank of America. It's great to have you both here. Ohsung, you're here on set with me. I'm going to kick this off with you because we did have stocks finish fractionally higher today. CPI basically in line. This puts claims data perhaps in even more focus tomorrow. What are you watching?
Yeah, thanks for having me today. I mean, we get some more economic data tomorrow and big earnings tomorrow. So those are some of the things that I'm watching. And I think it's really about growth going forward. I mean, the market's basically telling us that inflation is no longer a problem. I mean, we have seen limited actions today. I mean, we kind of pre-traded that yesterday after PPI. But if you look at things like five-year break-evens, it's below 2%. So the market's basically telling us that inflation is no longer a problem. And going forward, it's really going to be about growth.
Barbara, I want to get your thoughts on if this is about growth going forward, how do you position yourself as an investor? Does tech still belong in the portfolio, especially when it's perked back up so far to start this week? Or do you look to the other 493 stocks?
Yes, no. Well, I think tech, when everybody thinks it's done and over and crowded, we have a little bit of a correction, a little bit of give back. And I think what you saw in this last week, when we had the Monday flash crash, if you will, is that people leapt in to buy back these big cap tech names because they do have the growth that is sustainable for some time to come. So I think you still have to be in the mega cap tech. You can add when you have these moments in time. And I think, though, it's tough right now in terms of seeing a rotation to other areas or just spreading it out. Yes, I still think you can be rewarded for stock picking. You're getting moments like Chipotle, with that amazing news yesterday about the CEO leaving to join Starbucks, and Chipotle sold off. I think it's a great buying opportunity. There's names like that or CrowdStrike, which really got hurt by that bug in their system that shut down a lot of things. So you're getting opportunities, in these growth names of brand franchises. So I think you continue to look there. But I do think the emphasis will continue to be on growth in the economy. As Ohsung just said, inflation looks, the investors and the Fed looks like the inflation is pretty much under control. So now it's really about the jobs. We get an important jobs number September 9th before the Fed meets the next time. And I think that's going to have a big impact in terms of whether they raise or they cut 25 bips or 50 bips. So I think all eyes are on what's happening with jobs because obviously that fuels consumer spending and the economy.
Okay. So if growth is in focus right now, why buy cyclicals, which I know you're arguing for?
Yeah, so at the index level for the S&P 500, we are more neutral. We see more opportunities within the index, namely the equal-weighted S&P 500. And post-CPI, not the one from today, but from last month, we highlighted three reasons to rotate into cyclicals. Number one, rate pressure is easing. Number two, I think growth is ultimately going to be supported by the Fed. If inflation is no longer a problem, growth becomes the Fed's sole mandate, and I think it's going to be ultimately be supported. And number three, and most importantly, earnings are broadening out. In Q2, the other 493 posted its first positive earnings growth since Q4 of 22, growing earnings by 8% year over year, actually beating consensus numbers by 1%. So earnings are broadening out, and I think so should the market.
But aren't earnings expectations also, or earnings estimates, I should say, aren't those also starting to revise lower for the second half of the year?
In Q3, we saw about 2% cut so far, but that's basically in line with the historical trend. Heading into earnings over a 3-month period, heading into earnings, we typically see 3% cut in EPS for the following quarter. So it's not unusual to see a cut into earnings.
We're waiting on Cisco results, Barb. How important are those going to be, both as a macro bellwether for IT spending and also as maybe perhaps another data point or another indicator for where this AI investment is headed and how quickly it comes to fruition?
Well, I think, it's a good question, Morgan. I think on the margin, there's going to be some good information, to be had. I don't think it's going to be major. I mean, they are trying to grow. They just acquired with Splunk. And their big problem is right now networking demand is pretty soft. And we haven't seen many green shoots there. We need to see what's happening. So apparently a lot of their customers are taking resources away from their budget to spend on AI. And of course, they are trying to get into the AI play. They probably have visibility on about $1 billion in AI networking equipment. And we'll see what they have to say and how much that will pick up. But I think expectations are pretty low going into the print in terms of revenue growth.